Good morning, Kirsten.
Good morning, Anna. So I'd just like to begin today's session by acknowledging the traditional owners of the land in which we join today's meeting from wherever you are across our vast and diverse country. On our behalf, I want to pay my respects to elders, past, present and future, and extend that respect to Aboriginal and Torres Strait Islander peoples joining us today. I'd also like to acknowledge that leadership is not a new concept for our First Nations people. They have been demonstrating leadership for tens of thousands of years in caring for our country and putting a real value on our environment. I'm grateful for their leadership and sharing of wisdom. So at Business and Heals, we love connecting our community to amazing people who can help and inspire. We love to fast track people to succeed and to step into their future prepared and armed with the tools that they need to succeed. We have 4 pillars, being education, mentoring, networking and marketing. And our community is now over 200,000, which spans across Asia, Australia, Asia, the United Arab Emirates, and now into Europe. Today is one of those opportunities to connect you all to our partners at NAB, who are passionate about being the champion for SMEs. Given the economy and the uncertainty at the moment, there has never been a better time to have this discussion. Now, without further ado, I'd really like to welcome Ana Marinkovic, who is the Executive General Manager from Small Business at NAB. Ana leads Australia's biggest small business bank, where her team look after more than 1 million business owners across Australia through digitally innovative solutions and best-in-class expertise to support their customers' needs. Ana regularly spends time with small business owners and has a deep understanding of their challenges and opportunities. We will have a short Q&A session at the end of today's webinar. If you do have any questions, if at any time throughout today's session something twigs you and you'd really love to learn a little bit more, please pop that question into the Q&A or into the chat box, and we will have a little bit of time at the end to ask both our panelists today. Thank you very much, Ana. I will move across to you.
Wonderful. Thank you very much, Kirsten, for such a generous introduction. And I would also like to start by acknowledging the traditional owners of the lands on which we are gathered today, and pay our respects to their elders, past, present, and emerging. So, as mentioned, I have the privilege of leading Australia's biggest small business bank, where we are really proud to support small businesses start, grow and sustain their enterprises and manage their businesses to great success. I am really excited to kick off this session of Ana Asks series of conversations where I'll be speaking to experts across the field on the topics that are impacting our SMEs across Australia. Today, I am very, very pleased to be joined by NAB's Chief Economist, Oster. Now, as Chief Economist, Alan is responsible for NAB's global economic and our financial forecasts, probably one of the most experienced economists in the region, and incredibly respected and highly quoted commentator on the Australian and global economic and policy issues. So thank you so very much, Alan, for joining us today and agreeing to be part of this inaugural session in the series. Now, Alan, we know that businesses have really been experiencing a lot of challenges, particularly as of late. And what I'd like to start this conversation with is around your macro view as to how do you see the economy performing, and what are we to expect over the next 6 to 12 months?
Thanks, Anna. It's a pleasure to be here. So I'll get out my crystal ball, which is not great. Look, I think clearly interest rates are having an impact on,
Yes.
on liquidity. And so we would expect to see the consumer and then ultimately the business situation to slow significantly. So we're expecting growth, let's say it was 2.7 through the course of last year, 0.7 this year.
So significant drop.
A really big drop. And so I think one of the issues is no one knows exactly when and how much. But we're saying, and we saw in the GDP for the first quarter, pretty slow consumption. I don't think we'll get very much consumption from here on in. And I think broadly, we would expect to see unemployment edge up a little bit. Hopefully it doesn't go up too far.
Yes.
We're sort of thinking about maybe 1 and possibly 2 more rate rises, and we'll make a sort of decision of that over the weekend. But let's assume they've got at least 1 and maybe 2. And that, I think, will make life a little bit more difficult.
Yeah,
it
certainly
sort of
will.
understands it. And so, however, I can also see an economy that doesn't grow in the back end of this year, doesn't grow early next year, and the RBA will be cutting rates. So as long as as long as you can sort of survive for 12 months, and that means unemployment's okay, then this is manageable. But you just need to be a bit careful, because what we don't know is how the consumer will respond. A lot of people haven't seen these sort of rate rise increases
In their lifetime.
in their lifetimes. And, I may have seen them,
Yes.
but most consumers out there have not seen them. And so we're not sure how their behaviour. The other thing I think is really important is, although banks announce that they're going to, pass it on straight away,
Yes.
it takes about 3 months
For you to expect
before the actual people actually pay it. So they've got, let's call it another 1% to go in terms of if the RBA didn't do anything. You've got 1% increase in rates still coming. And then you've got a lot of people who are basically on interest rates of 2% or less, are going to be moving over to 6%.
That's right.
And that's having a big impact in our book anyway in the second half of this year, and I think across the banking system. So reality is things are going to slow. Inflation is going to stay a little bit higher for a while, but it too will slow, because at present business sort of thinks that they can pass on any increase. In 6 to 12 months, they'll be saying that they might not be able to, and they'll be competing for market share. So
let's unpack some of these issues, Alan. Let's start with the unemployment piece. So over the last, really since COVID, we've been in this situation whereby the number one concern for small business in particular has been access to labour. And I think I've spoken about the fact that I've visited various small businesses across the country where some of them were paying $80-90 an hour for certain for farmers to pick up the fruit of the ground, for the labor that used to be significantly cheaper. Now we are getting into a space whereby unemployment may actually start rising. What does that mean for labor? What does that mean for the cost of labour as well?
Well, we think the cost of labour is going up, and obviously the national wage case is part of that story. It's very small in terms of direct impacts, but it flows through, so it probably affects 20%. Can't get suitable labour, we actually have surveys on that, and basically during the peak of the mining boom, 50% of firms said that was the number one problem.
That's right.
Today, it's 90% of the firms are saying that's the number one problem. So the other issue you get out there is you're going to have to pay more for your labour. And secondly, if things start to slow, people are very reluctant to actually get rid of their labour because it's so hard to get.
That's right.
And so that actually produces something called productivity, which goes down. And the Reserve Bank gets upset about that and says you can have the wage increases, but it's got to be offset. But nobody's doing anything about productivity, and you've got a cyclical slowdown in productivity.
And it's interesting when you mentioned productivity. It's a pretty topical issue in the media at the moment. I mean,
well, the Reserve Bank's saying, well, you can have these 4% pay rises or more, provided you get increased productivity. But there's a structural thing from productivity, which is sort of doing things smarter, and then there's a cyclical part. And the cyclical part is at present pushing it down.
But
So
productivity hasn't been a challenge for Australia, just now. It's been a long-standing issue, hasn't it?
productivity was very good in the late 90s, but not too bad in the first part of 20,000 to 2010, and then it's been really bad. So we've been growing at about 1% in terms of structural productivity, and that's actually less than the rest of the world. Whereas if you go back to those periods that are stronger, it was like 2. So we've halved our productivity. Now you have to be a bit careful because it's cyclical things at present. But the more the Reserve Bank goes out and says, well, if you push up rates without productivity, I'll increase interest rates. So that's why it's a lot of debate about it. And I just don't see any reason why productivity is going to improve anytime soon. So that sort of makes me feel nervous about where the Reserve Bank's going to go.
So that's quite concerning.
That is a very concerning issue, because when we look internally, we have so we look at what's happening to our transaction data, we're looking to the profits that the clients of the business bank are getting. They're all saying it's slowing.
Yes.
And the problem in the past has always been monetary policy, long and variable lags, and you never know how long they're going to be. But what worries us is we think just at present, the economy is turning down or getting very much softer. And in that sort of environment, just continuing to whack up rates, it may be 1989 again. And so that's sort of what happened then. And people say, but the levels are much lower. Yes, but there's a lot more gearing. And it's the rate of change that sort of is difficult to understand.
So Alan, are the interest rates the only way for us to
No.
Because I know there are countries around the world where governments can turn around and say to the banks, stop lending, and the inflation issue is solved. Obviously, we operate in a free market economy, so that's not at our disposal. And are interest rates the only instrument to be able to control the inflation?
Short answer is no, but it's the only instrument the Reserve Bank's got.
Okay.
So what you should be then doing is looking at fiscal policy, and to some extent that's what the government tried to do by putting a cap to some extent on energy prices.
Yes.
Now they didn't actually push them down, but they sort of said that it didn't go up as much. You could try and make the economy operate more efficiently. So you'd be looking at the labour market, you'd be looking at allowing more people in terms
which
of
we are.
migration,
So there is a significant number of immigrants coming into.
And so normally it's about 160,000 a year. Now we're running about 400.
That's right. Yes.
And so that sort of helps a little bit in the I can't get through the labour as long as they're sort of skilled, but you can do a little bit, but you get into hard areas like labour market policy, etc. That gets tricky, and you're not doing very much to make things easier to recognise overseas skills. So my local dentist has a hygienist who's actually a dentist, but you can't get recognition for that. So if you sort of started to do that, that would actually help. But unfortunately, what you're seeing on both sides of politics, nobody's done that. All they're trying to do is keep the economy afloat, not trying to make it run better. And if you can make it run better, then fiscal policy is the number one thing that you should be doing. I'm not very optimistic about seeing anything in the near term.
Talking about that optimism, pessimism, Australia has weathered these storms incredibly well over the years, right?
Yeah.
The global financial crisis, COVID, the inflationary pressures that we are seeing at the moment. Are we going to continue to be the lucky country that is somehow able to get out of these very difficult monetary situations?
So my answer to that is yes. And I think let's assume that our forecasts are roughly right. It sort of says we're in 2025, growth is now above 2, inflation is back in the target, unemployment hopefully is still below 5. That looks pretty good. And so to me, the medium-term outlook, particularly as you sort of change your supply chain, you don't just take everything from China and you diversify it, I would have thought Australia would look globally really good, a really attractive place to come invest, to live, etc. So I think we can be the lucky country. unfortunately, in the short term,
There will be some pain.
you got pain, and you just can't defy gravity.
And let's talk about households. So another peculiar and interesting factor in that inflation is that it's being driven by services rather than goods inflation. What does that mean for an average household?
Well, it means you're paying more for electricity, you're paying more for your school fees, all that sort of thing. So you're paying more for travel agents to go overseas and to spend in that sort of area. And so to some extent, what we've seen is as the retail sector in particular starts to see some slowdowns, so people are not buying household goods as much, etc. It means that there already is some competition in that area. And you can sort of see it in some of the sort of stores that are sort of discretion. Whereas the service sector, people are saying, well, I still want my holiday. I still need to have my kids educated. And in that sort of environment, those pressures take a longer time to come down, particularly when we know things like electricity prices. Okay, they're not going to go up 20%, but in headlines they'll go up, but lower because the government's paid some more. So you're still going to get them going up. So we would hope that generally, and what you're seeing a little bit overseas is that some of that services inflation may just be starting to come down in places like America.
Yes, we've noticed that they seem to have reached that point.
That they seem very close to that. At this stage, it looks like the Fed, in a week's time, probably on hold. But you have to be careful because it depends on where the economy is going. But I would say that it will come down. Now we think growth at 0.7, Reserve Bank for this year, and Reserve Bank is like 1.5. I think they say I've got to increase rates to get that closer to us without hopefully causing problems. And therefore you could get inflation back to say 3% by the end of 24. At present, the RBA's forecasts are all saying that you won't get it back to 3% until mid-25. Mid-25 is a long way away.
It's a very long time.
And so, and so they need some more, essentially, insurance. And that's what I think they're doing. It's just that it's a very fine judgment if the economy is starting. In the past, if the economy starts to turn down and you're still increasing rates, sorry, you're in trouble. And I think that's close. So
if we kind of now shift to the small business environment in particular, some 85% of businesses in Australia are either sole traders or owned by mums and dads. As Australian households start to think about where they are spending their discretionary dollar, how is this going to start impacting the sustainability of these small businesses?
Depends which part of the small business you're in. So if you're just selling essentially discretionary items that people can say, oh, I don't need to do that, that's a problem because they're the ones that are going to cut back. If you're providing services, that's probably not
essential services.
Essential services, that's not going to get cut back. I think, a lot of for businesses, they need to sort of think about how can I make my stuff more essential, put it that way.
And provide more value, I suppose.
More value add, And so there will be some people who have trouble. The consumers, I think, generally will probably go looking for a second job. I hope that unemployment doesn't go too high. I don't think it will. That's not our forecast. But, you've got to be realistic. You've got 12 months or so to see this through. And that's what I think we're in. Beyond that, I'm quite optimistic, as I said. But if you can add value, and, Australia's been pretty good at adding value. So you think about, when people stopped going to restaurants during COVID, well, they all had to take away.
That's right.
And
we found a way to continue
around.
to service
So you
customers,
do that sort of thing, and I think that becomes much more attractive as a small business.
And if I am a first-time buyer, should I be holding off for the next 12 months, or should I?
Okay, so my response
take the plunge.
nobody knows exactly what's happening to house prices. So we're thinking that maybe they're up 5% from here on.
Why they continue to be so resilient?
Okay, so there's two main reasons. Number one, there's a lot more people coming in. We're talking about immigration, so there's more people looking for a house. Number two, up until recently, like this week, people were saying, "Oh, the Reserve Bank's nearly done."
Yes.
And so therefore they're doing that. The other issue that's a little bit more complicated, and nobody says this, the amount of turnover in the market is down 25%. So if you've got less supply coming on because people are nervous. So my sort of general advice would be keep trying to pay down your mortgage, number one. Number two, if it's a good property, you should think about it as a 5-year investment. Don't for thinking about, oh, I'm going to buy it now, et cetera, et cetera. Assume that maybe rates go up a couple of percent, and can I fund this? If I can fund it, then 5 years' time, it'll look a really good investment. But if I'm trying to think about, oh, should I buy now, or should I buy in 6 months' time, and then I'm going to sell in 12 months, go to the races. You don't know.
Black or red.
Yeah, black or red, exactly.
So your son comes to you and says, Dad, Chief Economist, you know what the economy is doing. I've got $100,000. I just won it on the red or black. What should I do with it?
And I do have a son, and he did ask me that. And I said, what you do is you basically accelerate the repayments.
Mortgage repayments.
Mortgage. So if I had 100,000, I'd take 100,000 off the mortgage. And that would make
sound advice.
Yeah, well, it just basically says, well, it'll put me in a good position going forward. You know, and to me, that's what people should be doing. So I've actually said to him, right, well, you didn't win 100,000, but you're getting more than you need. So why don't you just work out, let's say it's another 0.5% of interest rate, figure out what that would cost and pay it now. And then so when it actually happens, you don't get liquidity constrained. And so that's the way I think you should look at it.
Sound advice. And share market, where do we see share market going?
I wish I knew. Short answer is, look, if the economy is going to slow as much as I think it's going to slow, share market ultimately isn't going to perform great. Now, it's been very strong, but I think the more that people start to say, hey, this is a 50-50 recession call, then you've got to think, not only does the consumer slow, but the consumer's not buying off business, so business is going to slow. And in some areas, obviously, if you're selling household goods, etc., that are very discretionary, it's going to slow a lot. So to me, I'd be happy if the share market sort of went sideways for a while, and then maybe in a couple of years' time back to sort of long-run average 5-7%.
5 to 7%. I was recently at a dinner for startups and young entrepreneurs that have ended up getting quite a lot of VC and private equity investment, and they were worried about their ability to turn a profit and their sustainability. And incidentally, I actually read in the Fin Review yesterday or the day before about the concern of a number of startups in Australia trading insolvent over winter. What are your thoughts on this? Do you think this is an issue for these entrepreneurs and actually more broadly for the economy?
Well, so far we haven't seen a lot of bad debts go up. But if you were basically selling yourself on the fact that in 5 years' time I'm going to make a lot of money, you might not be there in 5 years, is the honest answer. We in a bank are not seeing huge amounts of increases in bad debts, but they are going up a little bit, albeit very low levels. And we're sort of positioning ourselves to say, well, I think it'll go up more. In terms of the data on bankruptcies, that's a bit dated, so it's a bit hard to get that data.
When are we going to get that more?
I think you're going to see it at the back end of this year. So, if the economy stops or goes sideways over the next 6 to 9 months, then that's normally when you would see it. That's when you would expect to see the labour market deteriorating.
Do you think there are more companies operating in that safe harbour zone now than they were, let's say, 12 to 18 months ago?
I think Australian small business in particular, but even general business during COVID, went back and looked at their line-by-line expenses.
Yes, they certainly did.
And therefore, they are in a better position. And so I think they're probably in the safe harbour, but that doesn't mean that if, demand for your product collapses, you can survive that long. So it's a tricky situation, but I'm really reasonably confident, provided the Reserve Bank doesn't go crazy. I would get very worried if the Reserve Bank, for example, had 4, 8 or 5% for the cash rate, i.e. best part of another 100 points. So that would be a disaster. But
they would be aware of that as well.
I think they would be aware of that. They should be aware of that. I'm sure the government's aware of it. And you can see in the national accounts, consumption is hardly growing.
That's right.
And so, I think the economy will survive reasonably okay. And if you've got an unemployment rate below 5, you can still do things.
People are employed. They are earning money. They can continue to.
And so you keep going and you.
To meet those.
And Phil Lowe, the governor of the central bank, got a bit of flack the other day when he said, "Oh well, they can go and get a second job." But he's sort of right in terms of what he's saying. People can cut back on their spending and maybe buy cheaper stuff. That I think I've said to you before, they're buying mince rather than meat.
Yes.
Like that sort of stuff, and you can get by with that.
Speaking of that second job, most of the small business owners that I talk to, they feel like they work 30 different jobs. But I do agree with what you just said around the fact that, during COVID, the small business community really had to look hard and fast at their overall balance sheets, at their fixed costs, and transform the way in which they were operating. And so many of them have come out of that experience a lot more resilient, with really good strategies to mitigate the risks going forward. So I think from that perspective, I think that our SME community is in a better shape than it's ever been.
Yeah, I think they're much better than that. And the bad debts are still at levels that are really low.
They are. But there is one thing that does worry me, Alan, and that is the ATO debt for small business. And it seems like, and we know that ATO has started making those outbound calls. And so that just seems to be like another headwind. And it kind of think, how many of these headwinds can we sustain, particularly in this segment?
Yeah, the area that we know that the ATO is owed a lot of money is construction.
Yes, absolutely.
They're roughly about 7 times any other industry. So, essentially reality is if unemployment starts to go up, wages sort of and prices sort of crunch margins, then the government's really needs to think about how do I get more money in without necessarily killing the golden goose. And so I don't think it's a great time for the ATO to be super aggressive searching for money, is sort of my bottom line. It would be nice if you looked at things like GST, and I know that's controversial, and those sort of things, broadening the base a bit. Even on home loans or home areas, you look at replacing stamp duty with an annual land tax. Now, temporarily, that sort of is a bit tricky, because people have just paid their stamp duty, and therefore they need some sort of exemption. And state governments rely on stamp duty a lot.
That's right.
So it can be an issue, but you don't need the tax office being super aggressive in the current environment. And I think as they struggle for extra revenues, that's an issue. And if you look at phase 3 tax cuts, for example, it's all about trying to get rid of bracket creep.
That's right.
And bracket creep essentially, so if you're getting income of X, essentially the tax office is getting X plus because of bracket creep. And so, yeah.
And that, our the tax coffers have not been particularly negatively impacted when you think about it.
No. Well, the economy's done really well.
Yes, particularly from Western Australia.
Yes, Western Australia's doing well. It's sort of the strongest. Victoria's sort of the weakest, or Victoria,
Yes.
South Australia. Clearly, the breakup of GST helps a lot. And the mining industry is still doing pretty well. So they're making a lot of profit in that sort of, and then it's circulating, but it'll come down to.
Do you think the budget has done enough for small business?
Essentially, I don't think the budget did practically anything for small business. Okay, you had the instant asset write-off,
Yes.
etc., but not a lot of money. And so that sort of thing just means that you make your investment now, so you've got to get it in by June.
But you've got to have the money to spend the
You've got
money
to have
as
the
well.
money. And they can get it back almost straight away. But what it does, it sort of keeps business investment and business credit growing. And come 1 July, it then goes into a hole. So it's just a timing thing. So I don't really see the budget doing very much for small business. And I actually think what happened was, in the budget in particular, the government just has essentially let most of the money come in that came out of the better labour market and also higher commodity prices. They've got their spending pattern going forward. And as the economy slows, they get less revenue and therefore the budget deficit blows out. So I actually think the budget was completely neutral in terms of inflation. It didn't make things better, it didn't make things worse. It was basically sideways.
It's good to hear that, because there are differing views on this, particularly in the media.
Yeah, so we look at what's called structural deficit. And so we're sort of trying to separate out what the economy is doing to what is the government doing to the economy. And basically, if you look at that structural deficit, it goes sideways. So it didn't help. It sort of was a little bit extra spending this year, but very tiny. And, they talk about, a fair bit of money, 50 billion sort of thing being spent, et cetera, over 4 or 5 years. But the economy does $2 trillion a year.
Yes.
So it's
a very
tiny
tiny impact.
Yeah.
And we're seeing Chinese economy recovering.
Yes, it's
slowly.
It's looking better. What you're getting is you get very strong growth at present, because you're looking at 12 months ago, they were all shut.
That's right, yes.
So we're sort of getting to the stage where we think probably the momentum's going to slow a bit. And also, so we're talking about China growing about 5.5%.
5 to 6%.
Yeah.
So yes.
And by Chinese standards, that's not great.
Yes.
And if the Chinese thought their economy was wonderful, they recently just changed their interest rates policy with reserve ratio. So in other words, how much the bank can lend. So I think globally, China's important, and it will help some sectors, particularly if they get rid of some of their tariffs on us.
Do you think they will?
It looks like they're doing some, but I just don't know how much because they said, all right, well, we're going to get rid of some of these tariffs. Australia said, right, well, we won't take you to the World Trade Organization. Now Australia say, well, hang on, you haven't done anything. We might have to take you in. So we'll just wait and see. But I'd say the global economy is still struggling. And
particularly in Europe and in the US.
Yeah, so we sort of look at Europe and we say, is it a recession or isn't it? So we're talking 0.1 plus or minus 0.1. In the US, I think they are going to go into a recession. And I think New Zealand's going to go into a recession.
Yes.
And Australia, hopefully, I think is a 50-50, but we're relatively better than most of them at this stage.
Another interesting fact that I came across is this graph on the cost of containers.
Oh, yeah,
It went literally kind of in this, massive trajectory upwards. And it's dropped to essentially what were the pre-COVID levels.
It's below.
That's right. So what is driving that, and why isn't that then translating into the cost of goods?
Well, it should be translating into the cost of goods. And so I think what's happening is you get a little element of that. Yeah. But at this stage, and this is what the Reserve Bank doesn't like, is that people are saying, well, everything's going up, so I assume it's going to go up. And business can get away with it at this stage. Or they can protect their profits. Yeah. As the economy slows more and more,
Demand will drop.
the demand will drop. And that means people, instead of just passing it on, not worrying about market share, will say, maybe I need to cut these things to keep my market share up. So I think the goods is probably, it's sort of starting to slow now. And I think in the next 6 months it'll slow more. Some of the services will be more sticky.
Yes.
So electricity prices and education, all that sort of stuff, more sticky. But
well, the things that you give up at the very, those are the last things that you give up.
that's right.
The essentials.
So, and the one thing even now, it's interesting when we ask people, what are you going to spend on and what are you going to cut? The one area that they don't want to cut is healthcare.
Yes.
And health insurance. That's taboo.
It's the basic.
Don't want to do that.
Generally, I would have thought health, education.
Yeah, those sort of things that are
basics.
people saying, well, this is important for my child's development. And so they don't want to cut that.
Yes.
Now, maybe they'll not go to private schools as much. That's a choice. But generally, if it's to do with your health or your education, people are saying, no, that's important.
It's important to as well, yes. And cost of fuel, another really, topical item. It's always on the morning radio. Seems to go up and down, and no one can still quite understand why is it $2 one day and $1.80 another day, but has significant impact on on household budgets.
It sure does. And
where is that heading with OPEC announcing that they are
I think
again constraining the supply of
so
oil?
what's interesting is that what they call Brent oil in US dollars per barrel, it's sort of still in the mid-70s. So what's happening is what the oil producers are trying to do is they're trying to restrict supply so that doesn't actually reduce the price. They wanted to increase the price, but because demand is coming back, it means the price is not going up much. Now, in Australia, actually, it's more expensive to buy petrol at present. One, because the government changed the tax, and secondly, it's Australian dollars, not US dollars, the price. And so if the Australian dollar is down at 65, 66, it becomes more expensive against the US dollar, and therefore the price of oil.
Which brings me to an important point. Where is Aussie dollar going? Should I be planning my overseas trip, now on 24, 25, 26? What will be the best for my budget?
Depends where you're going. So if you're going to the US, we think the Australian dollar will actually go back up because the reason mid-70s, let's call it. Why? Because the US is in deep trouble and they're going to be cutting rates before we are. If you go to Europe, prices haven't changed much.
Not at all.
Not at all.
Yes.
So maybe I always go to Europe. So it sort of hasn't changed.
Yeah. And Alan, if we go back to kind of the basics in terms of advice for small business owners or those thinking about taking the plunge, taking the risk and opening up a restaurant or a cafe or a retail shop, what are the 2 or 3 things you would say are non-negotiable in terms of ensuring that they continue trading 12 months and beyond?
I think it would help a lot if you're in the service sector rather than if you're in the goods sector.
And is it just particular service sectors that require expertise or just generally in service sectors?
I think it's anything that requires expertise. People will always buy that. And unfortunately, the reality is in the 12 months, you need to be able to survive the next 12 months is sort of the bottom line. So I would be very conservative on your cash flow assumptions.
Yes.
So if you think you're really going to get it, $1 extra profit, fine. Why don't you just see if the market still works if you're going to get 50 cents, that sort of thing. So I would be very conservative, particularly in the short term. I would talk to the banks about how can I help get availability of credit and what can the bank help me with. I'd show the bank your plans about what's going to do and get their advice, because, bankers have been here before.
Yes.
And we sort of know what's happening, or we think we'll know what's going to happen. And so it's a tough period for a while.
And it's in everyone's interest to ensure that a business continues to operate.
Yeah, that's right. And so, a lot of people are going to put their entire wealth into that business. And if it sort of runs it out of cash halfway through, that's a problem.
Big problem. Especially, I think, in a small business space where a lot of small business owners utilize the equity in their home to help out with cash flow.
Yeah, and so I think you really, the number one thing I would do is be very conservative in planning. Number two, go and talk to your bank.
Do you think banks will tighten credit criteria and risk appetites as a result?
I don't think they're going to, well, they haven't so far.
Yes.
It makes it more tricky though when you get to a situation where, let's say, you're talking about an interest rate of 5 to 6, and then you've got a buffer of 3.
Mm-hmm.
So you come to the bank, and the banks sort of say, well, please show me how you get by the cash rate. If your mortgage went to 9%, that makes life a bit tricky. So if you can sort of do that and check that, then I think that's really important that you get outside advice and be super conservative in the short term.
In the short term. And make sure you keep your job.
And make sure you keep, and yeah, that's right. And so, it's I've never done it. My father did it, he was a motor mechanic, but that's fine. But, I think you just need to be conservative for a while.
I was at a dinner last night, Alan, where they talked about the fact that 65% of children in our kindergartens today will be in the future working in jobs that do not exist today.
That's exactly right.
Do you think the generative AI, when we talk about employment, that is a risk, real risk in that medium term for, majority of those administrative human jobs? Like what's that risk to the economy?
My short answer is not much. And the reason for that is what you find is, and so I go back to Karl Marx, right?
Yes.
He had something called the Industrial Reserve Army, by which he meant productivity and technology would be so powerful, everybody would lose their job.
Can I tell you, I never ever thought that I would hear a chief economist of a major, Western capitalist bank quote Marx.
But what happened was it didn't happen.
Yes.
That's what's really important. Yeah. So everybody gets scared. Now, there'll be some people who are in a job that's going to disappear.
Yes.
That's
already happened. It has been happening anyway.
It's been happening anyway. But there will be a lot of jobs generated as a part of this that we don't even know about. And so, I can look back in my career. I thought I'd either be a lawyer, etc., and I didn't even know what an economist was. And I accidentally fell into economics. So I'm sort of pretty optimistic that you won't get the Industrial Reserve Army coming out of AI. And so I'm pretty optimistic in the medium term.
Well, at least in the medium term, right?
In the medium term. Well,
maybe your grandkids.
Well, I think the problem in the short term is not the AI in the short term, it's basically interest rates in the economy in the short term.
Another topical issue that is also very tied up to economic issues is the environment and ESG and the Global Economic Forum talks about climate as being a top 10 a risk that's going to stay with us for another 50 years.
Yeah.
How do you see that evolving in Australia and the impact that will have? Coal is something, again, that is very topical in this country.
Look, I think we need to think about this as in a competitive context. So we need to have energy prices that are globally competitive. If you told me the coal industry is shutting tomorrow, I would say that's a big problem. But if you're going to progressively move it out over a 10 to 15 year period, that's fine. And progressively, you're going to see green energy is going to be important, going to be really important. And again, we're talking about the lucky country.
Yes.
Things you need, copper, lithium, etc. Australia's a big producer of these things. And so we are again in a good position. But, you know, you just don't want to close everything down straight away. You want to phase it over a medium-term period. And so I think that's really important.
And do you see any countries globally that are doing that really well?
Honest answer is not many. You know, sure you can move, you know, if you're in Europe, you can sort of, and don't have any fossil fuel, you can move off to that, but then you get hurt by the Russian-Ukraine situation.
That's right.
And, you know, and you use gas as a temporary. So it's difficult. I mean, one of the issues, for example, I spent 4 years in Paris, in France, the OECD. They're one of the few countries in Europe that don't have such a problem. Why? Because they have
nuclear power, of course.
And so,
but that is also quite,
you
know, controversial.
It's very controversial, but you know, we're a big producer of uranium. So if we ever decided politically we wanted to do that,
we could
do it. But I'm not saying we should. I'm just saying that, you know, particularly in the green area, you know, the stuff you need, Australia's a big producer of. And so I think that's good. But let's think of it as, I want to pay. I mean, at present, my understanding of the maths is that if you were actually running a new coal-fired energy, it would not be competitive. It's only if you got one that's already been built.
Yes.
The running costs. It makes it fine. But I think in the medium term we need to move to that, because increasingly that's what's going to happen.
And the last question from me, Alan, you actually mentioned already Russia, Ukraine, geopolitical risks. They seem to be, you know, we always seem to be on tenterhooks around what's happening with China, Taiwan, what's happening in Europe. There seems to be quite a lot of instability in the world. And
there is, although I grew up in the 70s and 80s and there was a lot of instability then. Look, we just don't know. Is the honest answer. So we can't put a China that invades Taiwan as our core forecast. We don't. Now, if we said, right, well, let's say it does, then we take it away and say, right, well, what would be happening? You'd see commodity prices crash, you'd see the equity markets crash, and you could run that through. But I think ultimately it's a risk. And the more that it happens, people get more nervous.
Because it becomes psychological as well. You end up getting applied psychology. You end up seeing the outcomes, even though it still remains in the risk sphere.
Yeah, that's right. And so it just makes people feel nervous.
Yes.
And it's like when people say, "Oh, the US is about to crash." Everyone gets, whether they're about to crash or not, everyone gets scared.
Absolutely.
And so that sort of
that trickle
and that sort of effect. Yeah, and that does trickle down.
And we did see, I mean, with the collapse of a couple of those banks, Silicon Valley Bank, and there's another one, just the impact on the global banking sector. Yeah,
and you know, I think the other one was when you look at Credit Suisse.
Yes.
That was more difficult. So the ones that sort of fell over in America to a large extent were ones that were sort of not very competent in terms of their balance sheet management. Credit Suisse looked okay.
Yes.
But then people lost confidence in it. And you never know what's going to do that. So, you know, as someone internally said, you don't want to be the wounded gazelle. The one who's running last is the one who's going to get picked on, fair or not fair, who knows.
Bit Darwinian, isn't it?
Yeah, it's a problem. But I think basically it's okay.
Speaking of confidence, we've got the business survey coming out.
Next week.
Next week. What can we expect? What can you tell us?
I can't tell you anything, but what I can tell you
Come on, Alan, just
no, I'll get thrown in jail. What I can tell you is what's been happening so far, and that is confidence is subpar. Actual outcomes are still good, but things like forward orders, which I think is really important, has been eroding away a lot.
Yeah, which we've seen.
Which we've seen, and so I would generally assume that's going to continue.
Thank you. Now, Kirsten, are there any questions from our audience for Alan that I did not manage to cover
And
in
you
this
managed to
45
cover
minutes.
so many, Anna, and great information there, Alan, as well. We do have a couple of questions. So one we've got is around purchasing an investment home. So when is the best time to do it? This year, 3 months, 6 months, perhaps out a year? And where would you also recommend the best places to invest?
Short answer is
Ball
I
again?
don't know. Yeah. Look, investment properties are very much like what I was saying before. It's a 5-year time frame. Buy a good one. So buy quality. Sort of buy, as they say, the worst house in the best street. And talk to your bank in terms of how you're going to fund it. And so, you know, do your cash flow. Interest rates go another 1% or whatever, some crazy number, I will still survive. So do it that side. Which places, I don't know. You know, people tell me maybe Queensland or Western Australia because they're going well now, but you never know. So I just look around for good quality property.
Great, thank you.
Sound advice.
Very. We've also got obviously a growing aging population. What do you think the impact of that population and moving out, accessing more of their superannuation, what's the impact of that on the economy?
Not a lot. What's sort of happening at present is people are staying in the workplace longer, and the participation rate, particularly in females, is now at a record level. So I sort of think that, yes, there's some redistribution. One thing that we don't have any information about is the bank of mum and dad. And it's happening, but you know, I've passed some money to my kid internally. You've got no idea what the kid's going to take that for. It's probably a deposit for the home. So I suspect that's sort of happening, and people are moving back in with their parents and all that sort of stuff. But I think generally it's not really a big swing factor in terms of the economy.
Thank you. At this point, we don't have any other questions, but I would really love to thank both of you for, oh, actually, we do have another one. Just quickly came in. Is there levers the government has to pull to help inflation, for example, increasing GST on luxury goods?
You can do GST on anything, but you've got to change it. Everybody's got to agree. So it's very difficult. And normally when you go back to what the GST was involved, it basically, you got income tax cuts to compensate for that. My sort of bottom line is if you're just going to increase GST on certain goods, you're going to create a system that's almost impossible to control. So you need to change essentially the level and not make it too complicated.
We have another one. Would you like to comment whether the Commonwealth should revisit the GST distribution amongst the states?
I'm not from Western Australia, so...
No doubt.
And I can't tell if the speaker was.
Look, I think the answer is probably that, you know, you've got a deal that sort of benefited a lot for Western Australia, and I think, to be honest, it was political. And it didn't help them that much. And everybody else is whinging about the fact that, you know, at a time when we're struggling, the one economy that's not struggling is the one economy that's getting a much more in GST than that you should really get based on what we've done in the past.
And it was definitely a WA question, so thank you very much. So thank you. I don't believe there's any further questions, so I would like to thank both of you today for taking time out of, which I know is a very busy schedule, to present on the topic of the economy and small business. And there was such great information you know, through today's webinar. So thank you both very much. Thank you to everybody who attended. Wonderful questions there at the end. And we look forward to seeing you again at a future Business in Heels event. So thank you very much for attending today. Have a great rest of your week.
Thank you, Kirsten.
Thank you.
Thanks.